Hello, my name's Damien Talbot. I'm a tax partner here at Warren & Stewart.
My name is Ryan Lane. I'm one of the senior tax managers here.
Today we're just going to give you our instant reaction from a tax practitioner's perspective as to the budget today given by the Chancellor, and let's see what we think about what George Osborne's got to say for himself, basically.
Well, from just a general point of view, you seem very fired up today. Lots of positive on the current economy and moving forwards. Lots of bits of tax for us to cover. Lots of different things happening. And lots of things coming in that have already been announced, but and they'll start to come in from the 6th of April. But let's just crack on and see what we've got, and then perhaps you call us or contact us if you've got any questions.
First thing is the personal allowance. That's very nice news that's continuing to increase. So from £10,000 from April 2014, the aim is to increase that to £10,500. Some interesting stings in the tails for some of our clients, especially those non-residents, because they're talking about restricting the level of personal allowances for those people who are not actually resident in the UK. But there's a consultation coming out to see what's going on there. Again, that feels like targeting non-resident landlords.
Certainly, combined with some other measures which we'll cover later on, certainly using the UK personal allowance, which is now one of the highest in the world, being at £10,000 before you pay any tax. Certainly they're looking to, make sure not everyone's abusing our generosity, if you like.
And I think it's really a case of very good news, I think, for the population as large. There's a lot of talk about moving the bands of the 40% as well. So for the sort of the middle income, which obviously the election is being geared up for next year, they're trying to ease people softly into this whole situation. Another good thing that came out today from the personal tax side of things is the ISA limit increasing to £15,000 and actually no longer having this unusual distinction between stocks and shares and cash. The exact details aren't 100% clear, but it feels like there's going to be a lot of flexibility and very generous, because they don't want savers to be taxed, I think.
I think, again, along with some other bits and pieces for sort of pensioners and people over 65, they're looking to treat the savers with a little bit more, give them a little bit more back, as opposed to their very low returns at the moment on bank rates and interest rates. The NISA, as it's being called, I don't know if that was a play on words or not, but it's certainly good news, less complication. Hopefully it will work and people will look to invest and use the new ISA rates.
And also the government are raising the funds with national savings certificates limits going from 30 to 40 there to £50,000, which could interest some people. And also I think there's also a special relief for pensioners. They can enter into a pensioners bond, which seems to guarantee some interest for those pensioners. So generally, if you're a saver, the good news, the cynics out there would be sort of suggesting perhaps the interest rate's going to go up anyway. So, so that's maybe. Point it has to, but yes. But that's it. All good, interesting news. And I think the next thing that's really interesting out there is what's happening with pensions as well. We don't know the exact details, and this is all going to come out over the next few weeks. But the main thing is they're increasing flexibility to people who put money into pensions, and there's a lot of talk about not necessarily needing to have an annuity.
Yes, indeed. The annuity market's probably rushing around at the moment. Just shortly after the budget speech, we'll have to wait and see what happens. Certainly the pensions industry has already been battered with various changes over the last few years, and this is something else, but slightly more positive for the people who are investing in pensions and using pensions. So we'll have to wait and see. As Damien said, it's interesting times.
And I think it's really a case of, although there's lots of things on personal taxes and pensions, I think we should move on and talk about some more business taxes. Yes. So let's talk about CDIS next.
Yes, thankfully, CDIS seems to have been quite a success, and that's going to continue permanently as in its current form. It was introduced a couple of years ago. It seems to have taken off for much smaller enterprise investment companies. Again, it's promoting entrepreneurship, promoting investment in new companies, getting Britain working, as it were. So yes, very good news for people who are interested and investing in these smaller companies, and that looks set to continue permanently. So
I think it's good news on that front. I think some of the artificial EIS and CDIS schemes, I think the Chancellor is going to try and make sure that those schemes are not as attractive. So genuine CDIS, great news. Perhaps those artificial ones, not so great news. So very interesting from that side of things. Moving on to the next subject would be for small businesses is the annual investment allowance.
Yes, again, more tinkering with the annual investment allowance. It seems to go up and down a bit like a yo-yo, but in the last announcement, the Chancellor increased it to 250,000, and in this budget statement, he's gone a little bit further and increased it to £500,000. So the first £500,000 of investment in new assets, new plant, new machinery, is going to be covered 100%, so you can claim your tax relief as soon as you spend the money, and those are coming in from the 1st of April 14, and that's going to extend out to the 31st December 15. There may be some transitional calculations, so just be careful before you start launching out your 500,000, just because we're moving from a 250 to a 500. So speak to us before you do it, but certainly great news, more investment into plant, and that's the way forward, I think.
Absolutely, and I think there's going to be a few more visits from the inspectors looking a little bit more closely at the capital allowance claims that are going to be made, but the reality is that everyone can start to really look to invest in capital assets, which is what the government wants to drive the economy forward even further. So again, very good news.
Yes.
Backed up with the fact that corporate tax rates are falling 21%, as the Chancellor said, in the next few weeks, and 20% in 12 months' time. So all very, very good news from the corporate tax side of things. What would you like to talk about as our next subject?
We've got we've got lots of different things, but one of them perhaps about claims for reinvestment in intangibles. If you're rolling over gains and those funds are being used to purchase intangible assets, that's not going to be allowed anymore. They're going to legislate to change that from this current finance bill. So it's be careful what your investments or what your money's being used for when you invest in a new business or putting your money into your company.
I think that probably goes along with the bingo duty rates changing as well. Yes. Probably not on everyone's agenda, no. but again, if you're into bingo, it's all going down. Should be a bit cheaper, or some more money from Mecca, I guess.
Well, exactly. But again, it's encouraging people not just on their taxes, but getting them out there, getting them out spending some of their money that people have been holding on to for a long time, just because they weren't sure about what's going on. So yes, all good.
Enveloping of residential property?
Well, this was introduced quite a while ago, a couple of years ago, that an annual tax on dwellings and property that's held inside non-natural persons, which counts as companies or trusts, for instance. That's being extended. It was always just on property and assets over £2 million, but that's being extended, and it's been extended quite drastically. And from the 1st of April 2016, it's going to count for properties worth only £500,000, 500,000. Now, that's pretty much the entire London property market. So again, it's one of those, is it being targeted for the London property market? Again, something else that we've covered before when the autumn statement came out about attacking landlords who don't own property through their personally, but through a company or non-natural person.
Absolutely, and it's really a case of this probably doesn't affect many of our clients, but it's just one of those things. Anything that's out there as a scheme, the government's trying to close it down and disincentivise you for actually using these non-resident companies to acquire property, and they're going to hit you with a massive 15% stamp duty tax as well.
Yes.
So some really interesting facts out there, but so please make sure you're communicating with us. I think there's some other rules on company car tax. If you've got a company car, I think it's all bad news, but I think most clients realise company cars tends to be bad news at this point in time. Again, more news on the partnership review. Again, this is detailed stuff, so I don't think we need to get into it.
It's something that was raised in the autumn statement back in December, so it's just really confirming that it's going ahead. There haven't been any changes. The revenue were supposedly in consultation, but they've made their decision and it's coming into law from April 2014. So if you haven't made your arrangements yet, you've got a little bit of time, but you need to sort out your partnership arrangements, your LLP arrangements, if that's not already been done.
And I think the last thing that I can see from this budget is a tax simplification note that they've talked about. It doesn't feel like this budget has achieved much in terms of tax simplification. But that's my take on it. But they're going to allow you to pay your national insurance through the self-assessment system. It sounds like a simplification for them rather than for us.
Well, yes, I think it's going to reduce the burden on the direct debit collections, which are £2 a week or whatever the number is. We'll see if they keep it at £2 a week or it gets absorbed into the Class 4 national insurance, which is always also paid with your self-assessment taxes. It would be interesting to see if they just keep Class 4 and increase the rate from 9% to 10 or 11% and use that as an excuse to collect Class 2 at the same time. So we'll see, be interesting times. But certainly we'll keep you posted.
I think it's a far more interesting budget than a Gordon Brown budget, but there we go. But let's come back to us if you've got more questions. This is just our instant feel on what's going on. But please have a look through our notes that should be attached to this video. And if there's any questions, as always, please give us a call.
Thanks very much.
Thank you.